this Bitcoin ETF is coming exactly as you suggest, at the right point for all of these things. And if it plays out like it has done in the past, and there's no guarantees of that, then generally speaking, you will start to attract a lot of new capital into the space. That's always been the case. So currently in crypto, there's 516 million wallets, but they grow at about 100% a year. So if that's right, we'll grow by another 500 million wallets somewhere between 2024 and 2025. Could this attract 10 billion, 50 billion over time of new capital into this emerging market of crypto land? And the probability is pretty high. I think that it's a very big deal. It's come at exactly the right time. And then the market will start focusing on the ETH ETF.
Yeah.
Which, by all accounts, seems like there's a reasonable probability that's going to come. And that's a lot of new capital.
Today we are joined by Raoul Pal, who gives us an updated prediction for Bitcoin and why he's unbelievably bullish in 2024. The upcoming Bitcoin halving event, set for April, on the heels of the recent approval of multiple Bitcoin ETFs by the US Securities and Exchange Commission, marks a historical milestone for the Bitcoin community. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, an Ethereum ETF will be approved by May of this year. The green light for these ETFs carries profound implications for the world of cryptocurrency and serves as the gateway for substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Raoul envisions that this development will pave the way for large corporations to incorporate cryptocurrencies into their balance sheets. Let's get right into the latest interview with Raoul Pal, as he gives his prediction for Bitcoin, the crypto market, and where we're headed in the coming weeks. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
We've been building this new digital world, this parallel kind of financial system. Let's call it crypto land. And then we've got fiat world, which is the existing world that we live in. Most of the world's liquidity and money exists in fiat land because it's much bigger than crypto world, crypto land. Now, what this ETF is basically a trade deal between these two countries. So people in fiat world can now go and invest in this new country easily. What it's then is a factor of, like with all trade deals, is will my return on capital be higher by investing in this emerging market versus in my domestic economy? Now, if we look at last year's price performance and typical annualized price performance of crypto over time, taking into account it has huge cycles, the Bitcoin economy grows at kind of 100% a year. So in which case, there'll be a lot of money coming from fiat world into crypto land. Another way of thinking about this is, okay, that's great. So it's likely to attract a lot of assets over this cycle. And a lot of assets will wash out when suddenly the returns aren't as good anymore. So we will see that. The other way you can think about it is we are IPOing Bitcoin. And we've all been seed investors or Series A, Series B, Series C investors, and we're now about to go to the big stage. And, many of us are kind of used to recent years where, generally speaking, IPOs haven't done great. But this is early cycle. There's not much investment in this space yet from fiat world. So the chances are we're going to attract a lot of assets. So short term, don't really know. It's not really my area of interest.
Yeah.
What my area of interest is could this attract 10 billion, 50 billion over time of new capital into this emerging market of crypto land? And the probability is pretty high because, a lot of people are looking for higher returns, higher return opportunities. You can see it by the amount of activity that goes on platforms like eToro, in things like Tesla and other technology stocks, right? People are searching out the risk curve because a lot of people are 401k investors in the US. So they invest in their pension, but then they also like to have other assets that maybe have a different risk reward profile. So over time, I think it's very, very positive. It just opens up to more people. Those of us who've been in crypto a long time know how difficult and painful it is to open a wallet, execute your own trades, do all this thing, think about self-custody. Now, platforms like eToro have really helped people onboard and get comfortable with this, but this makes it even easier.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Raoul asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Raoul highlights this being a significant development in the crypto ecosystem.
As I've coined it, the everything, everywhere, all at once cycle. So most of the key technologies have been in place for a while now.
Yep.
In terms of the applications layer, but it's the adoption of the applications layer, the adoption of NFTs by giant corporate brands, the adoption of blockchain rails for a whole bunch of different things, from traditional finance of putting, equities or derivatives or whatever on chain. I think that is coming. I think we are going to see, with stuff like Solana being able to create 1 million NFTs for $100, well, that means ticketing or any high frequency contractual stuff can happen. We're seeing Visa build on top of that. We're seeing massive speed increases again in Solana, where we've got Fire Dancer that has 1 million TPS. So that means high frequency trading can happen. So, new centralized exchanges and the rails for the finance system, okay, that can go on chain. We're seeing large corporate brands building using NFTs and other Web3 technologies. We're seeing the adoption via RAAs and the ETFs and other things. So we're seeing a lot in the space. And I think that continues. I think the other thing we all see is gaming. We've all been waiting for the gaming to meet Web3, and we're seeing quite a lot of evidence that that is on its way. We've got blockchain meets AI for authentication of who we are. We're about to go into an election in the US. And in fact, we're going through like 60 elections around the world. We've never gone through an election with AI. And the deep fakes driven by AI will mean you can't trust anything you see in the wild. Yes, you're on the eToro platform watching something. Well, it's authenticated by eToro. You go outside, you don't know whether an interview you're watching of you and me is actually the real interview. So I could be saying crazy things and everyone thinks, well, this was a real interview, right? This is a huge problem. How do we authenticate who humans are? How do we authenticate content? And I think blockchain is part of that. So I see the opportunity for that as well. In terms of NFTs themselves, we're going to see a lot more use cases come. It's not just about your monkey JPEGs. But NFTs at the high quality asset side, we're talking about Beeple or Xcopy and these kind of famous artists that are very expensive. This thing trades exactly like assets do in fiat world. So in fiat world right now, the economy's slow, and the assets that require disposable income, trophy assets, lag because nobody's got any money yet. And so if you look at the price of Rolexes, you look at the price of wine, you look at the price of used cars, look at the price of art, it's all been going down because nobody's got any real money yet. Yes, the stock market's gone to new highs, but most people haven't participated. Everyone's businesses are still a bit slower than they want them to be, etc. It's exactly the same with ETFs, with NFTs. NFTs lag the price because really they start taking off when the price goes back to all-time highs. And people are like, oh, look, I've got money. I want to go and buy a crypto punk because I've got one in the background, because it's a social signaling status. It's a luxury good in crypto land, much like a Rolex watch is a luxury good in fiat world. So I just think it's lagged, and I think prices have started stabilizing a lot of the NFT market. A lot of it will go to zero, but out of the ashes we will find diamonds in that dust. And I think there's a lot that it's only gone through one cycle ever, so we need to figure it out. But I'm very bullish NFTs, the right ones.
Raoul Pal uncovers how changes in cryptocurrencies can send ripples effects through our wallets. Imagine a world where borrowing money becomes more expensive. Those cool credit card deals and car leases might not be as sweet. But it's not just about numbers, it's about fairness and how many things we can buy. Among the market noise, Bitcoin emerges as a rebel in the money world, shaking up old traditions. Pal points out that the everything code is like saying money is this invisible thread that's connecting it all together. With big banks being the guardians of balance, he says they're working behind the scenes to keep things steady, preventing financial chaos, but he believes the inevitable is coming. What do you think about the latest interview with Raoul Pal? And how do you think his prediction for Bitcoin, crypto, and the financial market plays out in the last part of 2023? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.